During these uncertain times, Reliance Jio has raised thousands of crores from leading technology investors like Facebook, Silver Lake, Vista Equity Partners, and General Atlantic in less than 4 weeks. They valued the company at more than 5 lakh crore. Current market cap of Reliance is around 10 lakh crore, which puts Reliance Jio at half the market cap of Reliance. These investments by private equity firms have made Reliance one of the most buzzing stocks in Dalal Street. When I'm writing this, Reliance share price is up more than 91% since its March 2020 lows. All of this on the back of the narrative that it is a tech or software company rather than a telecom or oil refining company. Now, I'm in no way doubting the quality of these private equity firms, as these firms employ some of the most academically intelligent men and women. What I am doing is raising some questions, some serious questions. Mukesh Ambani is one of the most successful and brilliant businessmen in the world. Probably you won't even be able to name a company that entered a completely new industry and went on to dominate it in 4 to 5 years. That's what Jio did to the telecom industry in India. But what helped Jio become this huge success? The answer is Ambani. More appropriately, Ambani's 3 core competencies. First, capital. Ambani's ability and courage to put enormous capital into his ventures. Reliance has the stomach to take enormous debt to undertake capital projects and make them successful. They keep doing it, from Jamnagar refinery to Reliance Retail and now Jio. Telecom industry needed capital to break the cartel of Airtel, Vodafone and Idea. The only way to do it was by infusing massive amount of capital and providing quality service at cheaper price. And that's what Ambani did. Second, lobbying. Things get a bit sketchy here as there are a lot of allegations without substantial evidence, but we all know Ambani has a magical ability to get laws and regulation in his own favor. Jio was no different. From the conversion of its ISP license to UASL to using Infotel as a front in the 4G spectrum auctions, Reliance played all its cards right to ensure that the laws in general were favorable to Jio. Only the ISP to UASL conversion at 1 to 2000 crores probably saved Reliance tens of thousands of crores during spectrum auctions. Third, execution. Ambani is brilliant with his execution. He knew that he won't be able to play the game or infuse enough capital to win in all the networks, so he totally focused on 4G network. This saved them a lot of money by avoiding running 2 and 3G networks. Reliance then collaborated with Samsung as their sole equipment provider, which probably provided some discounts too. But he knows he needs to save a lot more for efficient execution. So Reliance Jio acquired US-based firm Redisys in 2018 for $67 million and merged its subsidiary Ranco Technologies with itself to help in developing telecom equipment themselves. Now his focus is on 5G and being ahead in that. The 5G spectrum band is between 3300 MHz and 3600 MHz. TRAI has recommended a base price of 492 crore per megahertz. That's a minimum of 49,200 crores an operator needs right there. And guess what? How much Jio has raised? More than 4,200 crores. But if we get to the reason behind these private equity firms investing in Jio, they keep referring it as a next generation software product and platform company. So RIL is now selling itself as a tech and services company, that is the Jio platforms. But does it make sense? Will Ambani's 3 core competencies help him? Now, if you want to call Jio a tech or services company rather than a telecom company, you will have 2 options. First, recently launched Jio Mart, and second, the Jio App Ecosystem. Let's start with Jio Mart. If you look carefully, Facebook's main reason for investment in Jio platforms was Jio Mart. India is one of the biggest markets for WhatsApp, owned by Facebook with 400 to 500 million users, and tying with Jio Mart will make e-commerce available to these 400 to 500 million Indians. Sadly, it ends there. Also, Jio Mart claims that it will connect the local sellers or retailers with customers online. Spoiler alert, Amazon does exactly the same thing in India. But e-commerce is not as simple as it looks. At least not in India. It is a complete mess. There are a lot of fake sellers online. When I say a lot, I mean it. So if you look closely at what Amazon India is doing, a lot of its products are sold by Cloudtel, Apario Retail, Amazon Retail and some combination of these 4-5 mega sellers. Every time you buy from these 4-5 mega sellers, you're actually buying from Amazon, as it owns 49% stake in most of them. Amazon has realized that decentralized e-commerce in India is very ineffective. A lot of seller fraud happens. So to avoid that, Amazon eventually had to tie up with a bunch of blue chip Indian companies and become a seller themselves. Same thing happened with Flipkart. After they decided to go down the decentralized path, its WS Retail, a Flipkart-owned mega seller, lost its dominance in its own platform and product quality fell rapidly. Though I still hope Jio Mart will be able to figure out which both of these giants couldn't. Now let's apply Ambani's 3 core competencies in Jio Mart. First, capital. Good luck in competing with Amazon or Walmart's enormous cash flow. Even both Jeff Bezos and Amazon shareholders are okay with giving up short-term benefits for long-term value. So you can easily expect Bezos to not back down at any cost. Rather, pump more capital to tap into one of the largest e-commerce markets in the world. So the first competency won't help Jio Mart. Second, lobbying. Despite the recent changes in e-commerce regulations in India, both Amazon and Flipkart brilliantly managed and got past it. Though regulations can favor Jio as it is mostly owned by an Indian company, while the other two are largely owned by companies outside India. I personally don't think that it will be the case, but it's better to keep that in mind too. Reliance could get the government to make life tough for Amazon and Flipkart. But as CloudTel etc. are all proof, every law of government will be met with a creative workaround. And also on the other side, if Jio Mart goes through the decentralized path, they will be up against tons of small retailers whose collective political capital may trump Reliance any day. So I will keep this competency as non-conclusive, as it is neither against nor in favor of Jio as of current situation. Third, execution. Amazon and Flipkart have already spent years bringing down their delivery and packaging costs, but the Reliance retail segment could help Jio in faster delivery as they have quite a network of their stores across India, keeping in mind they won't go through the decentralized path. So this competency is in favor of Jio. Out of 3, first won't help, second can't be concluded, third will help. That's a pretty tough situation to be honest. Now let's come to the second option, Jio App Ecosystem. This could actually make Jio a tech, software or services company. But as far as I know, none of the Jio apps make much money despite having millions of downloads. To be honest, in my own network, I don't know anyone who uses or sent a message in Jio Chat or paid me through Jio Pay. Personally, I use none of them. But I do know quite a few people who use Jio TV, but an interesting point to be noted, none of them pays to watch content on it. Indians generally prefer free stuff, and when you watch most of the shows or music through YouTube for free, it will be hard for Jio to make people pay for it. And it isn't just free YouTube. In the paid video service segment, they are up against companies like Netflix, Hotstar, etc. who have championed their own content creation. And coming to the software company part, I don't think Jio is anywhere close to that. Tech is more about culture and less about the company. Now again, let's apply Ambani's 3 core competencies in Jio App Ecosystem. First, capital. We all have to accept you just can't compete with Facebook or Google's cash flow unless you have a new innovative product, which I don't find in any Jio apps. So first competency will definitely not help the Jio App Ecosystem. Second, lobbying. You can't make WhatsApp illegal or ban Google Pay. So definitely in this case, lobbying won't help. Third, execution. All of the Jio apps currently in the market are up against tech companies who have spent decades performing their execution. Let me remind you, PhonePe was launched earlier than Google Pay, yet both have the same market share in India. You actually need to have a culture where everyone right from the coder to the product manager thinks along the same lines, which these companies have mastered in. And definitely Reliance currently doesn't have any of those qualities. So this time, out of 3 competencies, none favors Jio. Finally, going back to the point where we started, is Reliance ridiculously overvalued? The answer is yes, if you are buying the stock depending on its supposed tech abilities. If you see their current revenue breakup, only 2% comes from digital services. So if you are buying Reliance because of its refining and telecom abilities, good luck. But if you are buying it because of its tech abilities, think again. I hope I'm totally wrong here and there are some things that I'm missing or are purposefully hidden by Mr. Ambani as a strategic advantage for the long-term value creation of the company. But whatever happens, I will always cheer for Mr. Mukesh Ambani. During the worst health crisis of modern times, he has managed to bring down a significant amount of his company's debt. Also, don't forget his massive disruption of the telecom industry. And please don't take this as investment advice. I'm in no way a certified investment advisor. This is just a one-to-one talk about my thoughts on Reliance Industries. As always, never forget our life mantra, save, invest, repeat. And do let me know if you own or thinking to buy Reliance shares. Don't forget to join my private Telegram channel and also my Twitter account. So this was your man, sir. I will talk to you in the next one. Stay independent.